Good morning, everybody, and welcome along to our webinar this morning. My name's Sarah Barron. I'm a Senior Manager in Menzies VAT Advisory Team, and I've got Laura Jack with me, who is an Assistant Manager in our Outsourcing Team. Just a little bit of housekeeping. We're going to record the session this morning and it will be sent out as a follow-up later. And you should be able to see either in the bar at the bottom or the top of your screen, there's a chat function. So if you've got any questions as we go along, if you pop your questions in that chat function, we can pick them up at the end. So we're planning to talk for 35 minutes this morning. There's not really scope in this to go into a huge amount of detail into the minutiae of the changes and what will and will not be subject to VAT. The intention is to give you an overview of some of the terms that you might be coming across, a bit of a practical impression of how you're going to deal with VAT going forward. Some invoicing considerations and what VAT recovery you're going to be able to get. So looking at the basics, possibly your only involvement with VAT to date has been just to be aware that you need to include VAT as a cost on relevant expenditure when you've been budgeting to date. But that's change now. So what is VAT? Why are you suddenly having to worry about it? So that's a tax on the end customer. So usually it flows through in the normal supply chain. A business will buy in materials and services, use those things that it's bought to create something. And if that business is going to charge VAT when it sells the goods or services on, then they get to recover the VAT that they've incurred on costs. So they collect VAT from their customers, pay that over to HMRC, but at the same time, they can recover the VAT that they've incurred on the cost that they've bought in. So it should finish up as VAT neutral to a fully taxable business. And by taxable, we mean anything that you charge VAT on at either standard, reduced or zero rate, but not anything that's exempt from VAT. So the new rules have moved schools from being a consumer, so somebody who's not selling something on which they're charging VAT, to a bit earlier down the supply chain. And from now on, the end customer is going to be the parents, the fee payers. So they are the people that are going to bear that VAT cost. So you're going to need to have records. So you can report your VAT, so you know what VAT you've incurred, what you can claim, what you need to charge VAT on. So the first step for many of you will be to register for VAT. You do that on the HMRC website. If you've already got an HMRC portal login set up, you add VAT onto that. And going through the process of the registration, one of the first questions you're asked is about the type of organisation you are. So for many, that will be a limited company. It may be a partnership. We've also got a lot of charities that are running schools. So if you're a company, you select that option. If you're a charity, you select other, and then on the next page, it will ask you whether you've also got a company's house registration. And each question will lead you on to the next bit of information that you require. So if you've got a company's house registration, you're going to need your UTR for that company. And everybody would need to identify one individual, so a director or a trustee, whose name goes on the VAT registration, and it's part of the HMRC measures to make sure that there aren't bogus VAT registrations being applied for. You need to tell HMRC the reason why you want to register or have to register, and that is the option there is because you need or want to charge VAT to your customers. So the date from which you need to register, although the law changes to bring VAT in for fees for terms starting after the 1st of January, if you're raising all your invoices in December, you do need to capture those invoices and charge VAT on those invoices. And there's a question on the registration application process that says if you intend to charge more than £90,000 in the next 30 days, then that will prompt you to have a registration from the start of December. So it's likely that if you're raising your fee income in December, you're going to need to be registered from the start of December. We've got some schools will have possibly a separate trading subsidiary, particularly where you've got a charity, they may well have a trading subsidiary. And if you've already got a company that is registered for VAT, the question I've been asked a few times is, can we use that same VAT registration number, just add the main school activity entity to that and create a VAT group? You can form a VAT group, but it would still need to be a whole new registration application. You can't keep the same number for a standalone registration and use that for a VAT group. So that would need to be a whole new application process. And if you have got more than one entity, it can be beneficial to form a VAT group, but it's always going to be a mathematical exercise. Compare having one registration as a VAT group to 2 or more registrations as separate entities, and do you gain by having it all in one? Certainly you reduce the admin burden by only having one return to do, but sometimes it actually costs more if your recovery is adversely impacted by having a VAT group. So at this point, we're going to put a poll up just to say, have you applied to register yet? And if you have you received your VAT number? We're dealing with HMRC on a regular basis, and we see that they're getting better at getting numbers issued. Certainly for some of the other sectors that I deal with, about yours, but they are getting better. It was terrible immediately after COVID, but they're getting better. But it's just interesting to know whether they are, yes, and have received. No, that's good. That is good. So it's good to see they've got their act in order. If you haven't received your VAT number yet, you can still invoice for your fees in December before you receive that number. What you can't do is show VAT separately on the bill. So you can invoice for the full VAT inclusive amount, but you just include just say gross fees. You can't show VAT separately. It might be that you need to reissue your invoices with the VAT split out later when you receive the VAT number. But generally that would just be for commercial businesses where your customer is going to be able to recover the VAT. I can't foresee any circumstances where parents would be able to recover VAT. No, they can't pay the fees through their business. These are personal expenses. You can't recover the VAT on that. So hopefully you won't need to go through a whole process of reissuing invoices again later. At this point, I'm going to hand over to Laura, who's going to talk in a little bit more detail about that record keeping.
Hello everyone. So we are just the next few slides, we're just going to cover some kind of software information and some invoices. The first point on here, this slide here, just kind of details how you need to have a VAT account, which is basically the evidence and backs up the figures that are pulled through onto your VAT return. So I don't know how many people have seen a VAT return before, but it's generally made up of 9 boxes. The first 4 boxes are the VAT on the input and the output. So any purchases and any sales that you're making over that period, normally a quarter that a VAT return will cover, but it can vary. Box 5 is the calculation, and this is where it's basically either a liability that you owe to HMRC, or it's going to be a refund of VAT that you've paid and you're due back from HMRC. 6 and 7 on the VAT return are looking at the net amounts in relation to the input and the output. So the net amounts of the sales and the purchases in the period. And 8 and 9, it's all related to EU, Northern Ireland and goods. I'm not necessarily expecting any of you to have figures in those boxes. So if there are any figures in those boxes when you're pulling your VAT returns, just double check those ones and make sure you are happy that they are correct. Part of submitting a VAT return is also being MTD compliant, so making tax digital. HMRC brought this into play a few years ago now, and really it just means that you have to submit your VAT return through a software that's MTD compliant. If for whatever reason your accounting software isn't MTD compliant, there are bridging softwares that act as a kind of, well, exactly as it says, as a bridging tool so that you can submit your VAT return to HMRC. That's just something to be aware of. It can be a bit of an overwhelming thing submitting a VAT return when you first come to do it and you've not done it before, so just bear that in mind. And the other thing I wanted to say was VAT returns need to be submitted by a particular deadline, and that is normally 1 month and 7 days after the period ends. So if you were doing a VAT return for the quarter ended March, you would need to submit that VAT return and pay any liability due by the 7th of May. The other points on here that we will touch on again in a minute is retain records for 6 years, and ideally you will hopefully be able to kind of keep copies of invoices attached to the transactions in your accounting software. People do make mistakes, it's okay, but these can be corrected. Ideally you don't want to make any mistakes, but they can be corrected, and you go over the last 4 years. And the final point is you must keep evidence of any input tax that you claim HMRC. And that is input tax, for those that you don't know, any purchases or goods that you're buying into the business. So when you are raising a sales invoice, or you have purchases and you've bought goods or services from a supplier, in order to recover the VAT, there are particular requirements that need to be met, and some of those requirements are detailed on this slide here. There is a lot more detail on the VAT Notice 700, so do have a read of that just to make sure you are comfortable. But these items listed on this slide here, these are the main ones, and I would actually say making sure that you do check the VAT number as well, just to make sure that you are happy that whoever you have bought those goods from or services from, they are actually VAT registered. And HMRC do have a VAT checker service. If you just Google HMRC VAT checker, you can put that VAT number in there and you will be able to see and double check that the invoice that you've got matches to the VAT number as well. So that's just a little tip for you there as well. So let's move on to the next slide. There we go. Cool. Okay, so this slide, we're just going to start thinking about software as well that you've got. So does anyone use any data software? Just enter in the chat box, yes or no. And the other question I do want to ask is, what accountancy software do you use? If you do use accountancy software, if you could let us know, that would be great. So on one of the earlier slides, I mentioned about keeping evidence of any purchase VAT. When you are buying goods, quite often you'll get an invoice or a receipt. Being able to attach that to the transaction in your accounting software is just going to make keeping all of that evidence a lot safer and a lot closer, a lot easier to find. So using data processing software such as Dext or Auto Entry, they are two very popular ones, can actually, one, speed up the processing side of actually inputting information into your account software, and two, it's the start of kind of keeping that evidence and keeping an online document easy to access. And then moving on to the account software as well. So at the moment, most of your account software, I would have thought, would have the VAT is turned off. So do go and have a look around, make sure, one, you actually have a VAT function, and two, it's turned on. Have a look in the settings at the tax rates that you've got as well, because there will probably just be the generic kind of basic input, output, 20% reduced rate, 0 rated and exempt items. But Sarah is going to touch on this a little bit later. But partial exemption does start to come into effect most likely with you. So, and that might just need to be, you might just need to take a bit of consideration when you are setting up your tax codes to make sure that when you actually apply the partial exemption calculation, that is as easy as possible. Finally, well, not finally, but VAT registration numbers, making sure that you've got your VAT registration number input correctly into your account software so that that can easily link to your government gateway account, and then you can submit the VAT return to HMRC, and that's therefore you're being MTD compliant. VAT quarters, make sure you have your VAT quarters entered correctly into your account software, because it's generally automated. You don't want to start pulling a VAT return out and it's pulling a quarter from January to March when actually your VAT quarters run on a different period. So just double check that and it all agrees. And also have a think about what basis you're going to be carrying out your VAT returns. So either the cash basis or the accruals basis. The accruals basis is the most standard, but there is a possibility that you might. I'm not actually really expecting any of you to be on the cash basis, but you could. So just make sure that that is done correctly as well, because depending which treatment you apply will impact the figures that are the numbers that are pulled into the VAT return. So again, you want to make sure that's right. And I think that's everything from me.
Excellent. Just to reiterate, Laura mentioned VAT Notice 700. That is the basic guide to VAT that HMRC have on their website. And whenever we have new clients who are new to VAT registering, that's a good starting point that we point them towards, to just have a look over that VAT Notice 700. It sets out everything that you need to know, and probably a lot more than you ever wanted to know about VAT, and it will signpost you to the more detailed information that it will affect you directly. So VAT on income, what do you need to charge VAT on? I think that's the thorny question at the moment. So the rule change has brought private school fees obviously into being standard rated for VAT, previously exempt from VAT. And if you invoice one all-encompassing fee, we have this concept in VAT legislation. If there's one overarching supply, you take the VAT liability of the predominant supply. So if you do one big fee to cover a term, everything that a pupil is going to receive in that term in one big fee, from now on, it's all going to be subject to VAT at the standard rate. But what you can do is split things out and look at each element separately. So if there's genuinely a shopping list that a pupil can opt in and out of, and there is a genuine choice, then it's worthwhile thinking about whether you can split things out and whether different elements, it would be beneficial to split them out and invoice them separately. And that you need to think about whether that's beneficial both to the fee payers, the parents, and to you as the school, because the parents are obviously going to want to pay less VAT, but the more income you have that is subject to VAT, the more that you get to recover on your costs. So there are going to be some things that, you know, maybe you could get away with not charging VAT legitimately, but is that going to be more costly to you overall and ultimately to the fee payers if you exclude them from VAT? So here we go. This is the techie bit, I'm afraid. So in VAT legislation, what the start point for everything is that we assume that anything you sell is subject to VAT. And that's unless it falls into a relief or an exemption. But then some things are accepted from the exemption. So assuming everything that anybody sells is subject to VAT, but then there's Schedule 9 of the VAT Act, and that exempts things that are generally considered to be for the public good. So things like health, welfare, insurance, arts, and education, they're all in that Schedule 9, and they've always been exempt from VAT. And the rule that exempts education, it says that education by an eligible body is exempt from VAT, and it says a supply of goods or services closely linked to a supply of education are exempt from VAT. But the new rule has brought in this overarching exception, and the words of that exception don't quite take everything that you do out. So that exception says a supply of education by a private school other than nursery classes is taken out of the exemption. And the other thing that's taken out is board and lodging closely related to education by a private school. But what they haven't taken out for you is supplies closely linked to education. So your main fees for educating, for teaching children, that is going to be subject to VAT, but things that you supply that are closely linked to that, they can remain exempt. Nursery classes, they are also still exempt. There's a lot of detail about how you decide whether a nursery class is in or out. I don't intend to go into that in detail today. I think that's been covered elsewhere. But if you have questions, we can follow up with you later. Also, wraparound care. That falls into the definition of welfare. So that's still exempt from VAT, so long as it's not educational. So if you've got a breakfast club or an after-school club, that is exempt childcare. If they are top-up classes outside of the normal curriculum, then they would be educational and still they fall into the private school education, so they are now into taxable standard rated. So just to reiterate, so if something qualifies for more than one relief, so previously private school education fell into the exemption, so that was exempt from VAT, but if something could be into one of the other reliefs, so zero rating, some things are taxable but at 0%. If something can fall into more than one category, you always choose the most beneficial. And zero rating is, we like that because you get to recover VAT on your costs, but you don't have to charge VAT to the buyer. So if anything can fall into both exempt or zero rated, it goes into zero rating. So, is it beneficial to split out some of your income? The things that I think are causing the most thorny issues are school lunches. School lunches are a supply closely linked to education, but they are not in themselves teaching. So for day pupils, catering can remain exempt. But if you're supplying lunch to a boarder, that's part of their board and lodging, so that is brought into taxable. So school lunches, they can be exempt, they could be standard rated. If you sell books directly to pupils, so rather than just giving them out as part of the overall supply of education, which would now be standard rated, would have been exempt, would now be standard rated. Books, printed matter, the sale of those things is always zero rated. So if you sell books to the pupils rather than just providing them as part of the wrap-up fees, that's zero rated. Transport. So it used to be exempt if part of the overall supply of education. Now, if you're selling it as a separate supply, it's a supply closely linked to the education. So is it exempt? Or if you've got different size of minibus that you're providing, if you sell it separately, depending on the size of the bus, it's either standard rated or zero rated. So all of these things, if you've got things that fall into various categories, it's worth thinking about, do we want to wrap those up in one big fee for education, or do we want to carve those out? Would it be beneficial to us to carve those out and charge them separately? And the way you're going to make that decision is, from a VAT perspective, is, does it get you better VAT recovery? So if your school lunches, if you're saying that the fees for school lunches are exempt from VAT, it's highly likely that your suppliers are charging you VAT on the service that they provide. So if the school lunch fees are still exempt, you've got no VAT recovery on that. But if you wrap up your school lunches in an overall fee for education, that's now taxable. So you do get recovery on the costs of your catering. So it's I know some schools have been saying, well, we'll carve out the catering, we'll do this, that, and the other. Is it really worthwhile to carve out that catering and charge a separate fee, or do you want to wrap it up in something that's taxable? As I say, the parents will pay more VAT, but if you're not making much of a markup on that, then it might well be worthwhile leaving the catering in, covering it in the education fee, so you do get some VAT recovery. And another thing to think about when you're charging your fees is, if you're selling something on that somebody's providing to you, do you want to buy that in and sell it on as part of the overall fee for education, or can you treat it as a disbursement? So say for a music tutor, they are coming to school and providing services to the pupils. Can you treat it as not your income? So self-employed tutors are probably still exempt from VAT. If they're just self-employed, they're not working through a company, their fees should still be exempt from VAT. So if they charge the students directly, then there's no VAT charge on that. you could still collect the payment on their behalf and be in charge of when they're allowed to provide the lessons and timetabling considerations. But if you treat it as a disbursement and it's outside of your income, you don't have to charge VAT on that. So VAT on costs, what can you claim back? Going back to first principles, you can claim back VAT on costs that you incur for making a taxable business supply. So a taxable business supply is anything that you're charging VAT on at standard, reduced, or zero rate. So if you buy in things to use to make supplies that you're going to charge VAT on, so if any costs that you incur for the purpose of providing education that you're now going to charge VAT on, you get to recover the VAT on that. Remember, that includes anything that's zero rated. So if any costs that you incur, but the income you receive is zero rated, you can still recover the VAT on that. There might not be any direct VAT on those costs, but it adds to the overhead VAT recovery that we'll look at in a moment. But VAT incurred for the purposes of making exempt supplies is not input tax, so you can't recover that. So it's likely going forward you're going to have some taxable, some exempt sales. And so you can recover VAT incurred for the taxable purposes, not for the exempt purposes. And we need to work out how you apportion that, how you work out how much you can claim. So if you paint your nursery classroom, the fees for the nursery classroom are going to be, for the nursery education, still going to be exempt. So painting the nursery, that's not recoverable. And you put that cost, you'd apportion that directly to exempt activities, irrecoverable. If you paint an upper school classroom, that classroom is going to be used to provide taxable education. So the costs of painting that classroom, that's recoverable. That's going to be directly into the recoverable pot. But if you relay the car park, everybody's going to be able to use that car park, both taxable and exempt. And you've got to work out a way of apportioning the VAT on those costs. So we think of things in three silos. There's the directly attributable to taxable supplies, directly attributable to exempt supplies, and then we have this overhead pot. And there's a standard method to work out how much you can recover. So the standard method looks at the relative levels of income. I think a lot of schools are thinking about whether they need a special method, which could well be beneficial, but the start point is you use the standard method unless you can show to HMRC that it's not coming out with a fair and reasonable result. So you need to apply this standard method first and show why it's not fair and reasonable, and then propose a special method. So the standard method, you add up all of your taxable income. That's the standard reduced. I can't think that you would have anything reduced at the moment, or zero rated. And you also add up all of the exempt income, and you calculate a percentage from those figures. So it's taxable over taxable plus exempt. And that is the percentage of VAT on the overhead pot that you can recover. So the more taxable income you have, the more VAT recovery you have. So it's a mathematical exercise. Do the maths, do the school lunches, increase your taxable income to a level where you get more recovery overall. does selling books as a separate supply, as a separate supply of a book rather than a separate invoice for something that would still be as exempt supplies closely linked to education, would that up your taxable income just a little bit more so you get better recovery when you calculate your T over T plus E percentage? The other thing that you might have heard of is the capital goods scheme. If any of you studied VAT as accountants, this is the topic that sends shivers down most general accountants' spines. So the capital goods scheme is a special scheme for looking at how capital items are used. And for your purposes, it's buildings, not necessarily groundworks, but buildings costing more than £250,000 to either buy, build or refurbish. And you look at those things as if they have a 10-year useful life. So if you refurbished a gym in the last, so 3 years ago, you've got 3 years of use of that building, which are exempt from VAT. But then looking at the rest of its use over the 10-year adjustment period, it's going to be used now largely for taxable purposes. You can have some recovery. You need to look at the rules on how part years are apportioned. Might mean that you lose a year or so out of that, out of the remaining 7 years on that 3-year example. But still, some of that recovery is better than none at all. And then we've got things that you've paid for relatively recently. So when we're thinking about that, we have 2 separate sets of rules. We look at goods and services under 2 separate sets of rules. So if you've bought goods that you're still using, you bought those in the last 4 years, you can claim back the VAT on those. So if you bought a new set of desks, you're still using them, you can get the VAT back on those. Services that you paid for in the last 6 months, so long as they're not already used up. If they've already been consumed, then you can't claim them. Sorry, that slide's written the wrong way around. So long as they're not already used up. So if you bought a new computer software system that you're only going to start using from the 1st of January, that's not used up yet, you can get that VAT back. Something like the phone bill for the previous 6 months, that's already consumed, you can't have that. And these things you can claim on the first return, so long as you've got a proper VAT invoice to back them up. So I think that's our time pretty much used up for how we're going to speak to you this morning. In summary, it's complicated. There's a lack of guidance from HMRC. I suspect that they will see what people are doing, how they're trying to work the rules for them, and there'll be more guidance comes out over the next few months. They'll try and tackle things where they perceive people are being a bit over optimistic with their VAT accounting, and they'll react accordingly. So we've put a poll up on the screen for you, just for if you need some further help, in the future, or like a call from us about any particular topics. But otherwise, thank you very much for listening. We've got some time for questions, and if I can find the chat, let's see. We've got iFinance.
Okay, cool.
Yeah,
Thank you.
So those are the things. So if anybody else has any questions, if you pop them up there. Otherwise, if you would like us to follow up with anything specific, partial exemption calculations. Yeah. Yeah. I think setting up the partial exemption and making it flow through to how you actually file the return the only way you can generally do that is using a spreadsheet. So you kind of pull the data from your software into a spreadsheet, do the calculation, upload that into the software, and then feed it through to HMRC. But we can certainly help with setting that up and getting that working for you. So otherwise, thank you very much, everybody, and I wish you good luck on your VAT journey going forward.
Thank you, everyone.